Good afternoon to all of you. Dr. Shankar. Today we will learn about working capital management in financial management. So, first of all, we will learn that what is working capital. Working capital, as you know, the capital which is being used for the day-to-day expenses of the business. So, working capital is also known as the excess of current asset over current liabilities. So, current asset, you know, current assets are the assets which is convertible into cash within short period, that is within 1 year, and current liabilities are the liabilities which is been paid, which was convertible into cash within 1 year, so that the organization should pay the liabilities from the current asset. So, working capital, you can say that is excess of current assets, we can write as current asset, and current liabilities as CL. This is your WC, that is working capital. Okay? So, working capital is the current assets, the assets which is convertible into cash within 1 year, and current liabilities are the liabilities which is payable within 1 year. Why we want to convert the current asset into cash within 1 year? Because we have to pay the current liabilities within 1 year. And if we don't have sufficient current asset to pay the current liabilities, suppose I have current assets of 2 rupees and current liabilities of 5 rupees, then what happen? We cannot pay. So working capital is deficit, decrease in working capital, or increase in working capital. If the current assets increases, working capital will increase. If the current assets decreases, working capital will decrease. Okay? So, here current assets suppose 2 rupees, current liabilities suppose 1 rupees. So, this is what? Working capital is 1. And this 1 rupees of working capital is being used for the day-to-day expenses of the business. And organization must have, without working capital, the organization cannot run for a day or two. There is a problem to run the business smoothly. So, working capital is must for each and every organization. Now, in business, because we want to know the cycle of working capital, operating cycle. See, this operating cycle, because we know the working capital is current asset minus current liabilities. If I segregate the current asset, then current assets be segregated into stock, sundry debtors, bills receivables, and cash. And current liabilities, if I say, then current liabilities are sundry creditors. Sundry means more than one. When there is more than one creditors, then we can say sundry creditors. Sundry creditors, bills payable, outstanding expenses, and bank overdraft. These are the current liabilities and these are the current assets. Now, I told you the working capital. So if I say working capital is important, why? Because in each and every business organization there is an operating cycle. In operating cycle, what happened? Because we know how the business will run. Business cannot run without cash, because without cash you cannot purchase the raw materials, we cannot pay the wages, and so on and so forth. So we just create the cycle, and in the cycle just see what is happening. This is your cycle operating. In this way, in manufacturing organization will run smoothly. For any organization, cash is must. Without cash, you cannot run the organization. So, cash, suppose you want to start the business, you need cash. Why you need cash? Because we have to purchase the raw materials. So, raw materials, now the question arises is what? How much raw material you want to keep in stock? Because every day you are not going to purchase the raw materials. So we have to keep the raw materials, some of the raw materials in stock. Not more than, not the overstocking, not understocking. But we have to have the stock, raw material in stock. So when we are considering raw materials, then first step is raw materials in stock. Raw materials in stock. Say suppose 1 month. We will purchase the raw materials once in a month. Okay? So raw material stock is 1 month. 1 month. After that, I purchase the raw materials. Then we will send it to the factory for the process to start the manufacturing process. So this is called work in process. Work in process. That is W in P. Now the question is, what's the period, processing time? How much time it takes to convert the raw materials into finished goods? That is called processing time. Processing time. Maybe 1 month. So second steps is work in process. That is processing time. 1 month. After that, the raw materials been converted into finished goods. So finished goods. Now, it's very difficult. The day you produce the car, the same day you cannot sell. Am I right? So the day you produce, you cannot sell. So if I sell, suppose for a second, if I sell the goods, suppose I sell the finished goods the day I produce, then what happened? You will not get any car in the showroom. You will not get any product in Big Bazaar or in any shops. In showroom there is car. It means what? Finished goods in store. In Big Bazaar, in any grocery shop, there is product lying. It means finished goods in stock. That goods may be on the verge of sale, but right now it's not sold. So finished goods, the moment it came finished goods, then the question is finished goods in stock. Suppose 1 month again. Now, why there is a need of EMI? Because I don't want, because the organization is not cannot sell the goods by down payment, full down payment. So the finished goods sold on credit basis. So you will pay the full money in installment every month or every year. Maybe in 2 years, maybe in 3 years, maybe in 1 year. Right? So after that, what happened? Receivables. Bills, receivables. That is credit. When the